This week's episode of Life Planning 101 originally aired in 2018. Please enjoy. Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Welcome in Life Planning 101 on this marvelous Monday morning. As usual, we have Angela Kennedy Robinson with us. Good morning, Angela.
Good morning. Good Monday morning. I know we've been off track for a few weeks, but, we talked back in October about, having all these messes that tax reform could help you clean up, right? We were laughing about clean up on aisle 3. And so kind of want to revisit that today. And I'm specifically talking to business owners today because this is a big thing that we're seeing. We've been seeing it for a few years. And of course, it was more troublesome a year ago to get out of these kind of messes than it was today under tax reform. But, a lot of businesses have what's called a buy-sell agreement if there's a partnership or if there's multiple owners. Even people that don't have a partnership or, multiple owners, there's some buy-sell in place to usually take over a business if the spouse doesn't have anything to do with it or yada, yada. So, the question is mine in good health? And is my funding in good health? And I want to start out by telling you a story today, and it's about a gentleman named Joe. He and his partner, Mike, started a very successful business several years ago. And like most partners, they loved working together, but they dreaded the thought of working with each other's spouses.
Absolutely.
So
kids?
Are the kids or anybody, right? And so, and we find that a really common thing. Owners can laugh about it when their spouses are in the room, but we make sure and keep quiet when the spouses come in the room. But, it is true because I don't think anybody wants to be in business with, dead weight. And I don't mean that in a bad way, but if you don't know anything to be able to contribute to that business and help that business pick up where, your spouse left off, you got to ask yourself, am I really doing it harm or am I doing it good to get out? And is it doing it good for me to get out? So, Joe and his partner, Mike, were in that same situation. So like most business owners, the first place they go is their CPA. And so they went to their CPA and their CPA said, okay, yes, it would be good to do something. You need to go to your attorney and get it set up. So they went to their attorney and they wrote up this buy-sell agreement, and the attorney did a great job with the buy-sell agreement. Had clauses in there about how the business was going to be valued, because that's often an issue. Another topic for another day. But, that's a big deal. And then, what would happen at death? What would happen at disability? Lots of times the attorneys even leave that one out. And he said, and by the way, you guys need to find a way to fund this. And the most appropriate way to fund buy-sell agreements is via insurance,
Sure.
right? It's the cheapest way to fund buy-sell agreements. Because just imagine if you lost your business partner and all of a sudden you have to keep the business afloat, pay off his spouse, right? Hire someone to replace him. Where's that
cash flow?
Right, cash flow. And if it just so happens to be you're in an environment like 2008 when lending is impossible, when all this happens, how does that look? So, it can get worse and worse and worse. So his attorney did a great job by telling him that. So, Mike knew a guy that was an insurance agent, had went to college with him. He said, let's just go to him, and he sold him some insurance. And so they bought everything they were told to set, and they thought they were in good shape. But the question was, were they? And with that, we're going to take a quick break, and when we come back, we're going to tell the rest of Joe and Mike's story. You're not going to want to miss, because it turned out to be a tax nightmare.
And welcome back in. Segment 2 already. Angela, you have a tax nightmare on your hands.
Yes, did, you know. And so we were talking about a story about two partners, and, you know, they set up this buy-sell agreement. They thought they did everything right, you know, to be able to take care of a spouse or a disability event. They went and bought the insurance. Well, 10 years to the date last year, Joe died. So it was up to the test, right? This life insurance policy, was it actually going to fund things? Was it going to do things right? Was this buy-sell going to work? Well, the buy-sell worked great. It did what it was supposed to do. The business was valued. So Joe's spouse had a valuation that Mike was supposed to buy his shares for $2.8 million. And so that was all in good hands. There was $1.5 million of life insurance, and that's how much the company had grown, which also shows another issue. Some people don't go back and revisit, you know.
That a lot.
Yeah, revisit those needs. So, you know, their business grew in value a lot over that time frame, which, you know, that's usually why you're in business. So I hate to say, you probably need to get that reviewed. But, you know, that wasn't really just the only problem. What ended up happening is Joe paid the wife off. He was able to go get lending because it was last year, you know, so you had banks were great. A lot of times that can be a big risk, and, you know, banks may or may not lend to you, and it may be not favorable if they even do lend to you. So, you know, that happened. But the big thing is Joe was actually a little surprised when he goes to file his taxes, because what do we always know about life insurance death benefit?
Tax-free.
It's supposed to be tax-free, right?
Right.
Wrong. Not in this situation. It wasn't set up appropriately.
Ownership not right, or is that the issue?
So there's this little bitty law that was put back in 2006, and most insurance agents don't know about it. Most attorneys don't know about it unless all they do is buy-sell agreements. And it's very hidden, and it's called 101J. Okay, and 101J says that you have to supply the person that's being insured notice that you're going to insure them and get permission to insure them if it's business-owned insurance, right? Second thing is you have to notify the IRS on an annual basis that you own this policy on the insured. And if you do not notify them on an annual basis, you are not 101J compliant. So here's your clue. Are you sending notifications to the IRS? We see these left and right. I've never seen one that was. Isn't that sad?
Wow.
Never seen one that was. Okay, so they were at this risk, right? They had, you know, all this happened. Well, here's what ended up happening. I wrote down the numbers. Joe ended up paying $697,500 in taxes on these benefits that were supposed to be tax-free to the company, right? So $1.5 million is reduced by that. Now the amount he has to go get from the bank is really $1.997. So he had to get two separate. Yeah, had to get two separate loans. But it gets worse than this. Because of the way the buy-sell was set up, Joe's wife also paid taxes on the money that she received. So there was a double taxation. She paid $658,070 in taxes on selling her stock. So what you think, a lot of people say, well, how's that possible? So let me lay this out for you. You've got shares in a company for $2.5 million, and the owner wants to buy that out. Well, if he receives proceeds that are taxable, not non-taxable, the company's going to pay taxes on those proceeds. That shouldn't have happened, but it did happen. Secondly, Joe is buying out the wife's shares, right? So if he's buying out the wife's shares, whatever her basis was in the business, which was virtually nothing, right, then versus the current value of those shares, she's going to pay taxation when she sells. Think about if you own stock. It works no different, right? If you have stock that you bought for $10 and you sell it for $20, you're going to pay taxes on $10. So she paid taxes on virtually $2.8 million. So here's the thing. That $1.5 million at the end of the day was reduced by about $1.3 million. Is that not a tax nightmare?
Nightmare.
It didn't do anything it was supposed to do. And, the thing is, how many of us are in that circumstance? How many of us don't know if we're in that circumstance? If our buy-sell agreement isn't in line, or the 101J isn't in line, and that double taxation should have been avoided, absolutely. But really, there should have been no taxation in this transaction. And the second part to this wasn't 101J. The second part was just bad design of how the life insurance was owned. If it was owned differently, there would have never had any of this happen. And so the 1.5 would have truly been 1.5 million and less than that burden. So, the good news is that Joe's wife was out of Mike's hair, obviously, right? So there's good news. There's a silver lining in all of this. But Mike owes a lot of money to the bank currently. And I tell you what, we've been having a lot of market volatility. You know who the first person calling in is? Mike. Right? Why? He's a little bit more concerned than he used to be. Right? Do you think that's what he meant to happen?
Absolutely
not.
not.
What do you think that stress is doing to his business?
Probably hurting it very much.
Yeah, it is hurting.
He still had to replace Mike.
Yeah, he had to replace Joe. Absolutely.
Joe,
so yes, he had to replace Joe, and that took 2 employees, by the way. So, and he's still not extremely pleased with what he's got going on in that situation. So, and by the way, Mike was wanting to retire in the next couple years.
Not happening.
It's not happening now. Isn't that horrible? So when we come back, we're going to talk about some things you probably need to be looking for in your business to make sure you don't have a tax nightmare if the worst were to happen.
Final segment, Life Planning 101. Angela, you have all kinds of great information.
Yes.
Good.
You're looking at me kind of scared, and it is some scary information that we're talking about today, but that's why we're talking about it, right? And I think this just goes to prove, having a quarterback, having someone that actually understands a bigger picture, because in Joe and Mike's situation, we're talking about business succession planning, right? They went to their CPA. They went to their attorney. They went to their insurance agent. So shouldn't have this been done right? And was it really the fault of any one of them? No. It was the fact of the lack of knowledge of what was going on, the lack of oversight that the communication, nothing was being brought together. Nobody knew about, current laws because that wasn't their specialty. I'm a big believer in specialists. I really am. And I know that may sound crazy, but I think, it's like if you go to a surgeon for every problem that you have, what's going to be the answer every time? Surgery. Does that mean that you really need surgery?
That's why you get second opinions.
That's why you get second opinions. That's why you have a family practitioner to tell you, should you go to the surgery? Should you go to someone else? And the thing is that we do that with our finances too. So we go to the surgeon all the time thinking that's what we need. But in reality, we don't know what we need. We really needed to back up and go to that family practitioner so they could say, let's pick the specialist that needs to be, picked up and talked about here. In our situation, obviously, we don't write buy-sell agreements.
Right.
Obviously, we don't prepare taxes or file the 101J notices, right? But we know enough to know, hey, we need to get this specialist that all they do is buy sells, did over 300 buy sells last year. And they know their business so well that they're going to give us a guideline, even if you decide to use another attorney, that we've got that person to be able to go to and say, is this set up right? What are we missing? What steps do we need to take? What needs to happen here, right? And I think, that's often a missing piece because we just try to do things the cheapest, fastest, easiest way. And usually we think, well, I could just go to my so-and-so for that. Yeah. Well, the so-and-so you had, there's a good chance that if you're in a case like this, you've outgrown that so-and-so. Right. Doesn't mean that you may not even be able to use them. We've done that several times where we've actually used a current professional, but we've had to advise the current professional on what to do or how to do it, because they needed that quarterback. If you have, and I'm not here to pick on insurance agents, for example, but because I am one. But if you think about it, if you have an insurance agent, are they really going to know everything legally that should happen to avoid that double taxation? Are they tax specialists? Are they tax professionals?
No, it's not a one-size-fits-all.
No, it's not. And they can't know everything. We can't know everything. That's why we surround ourselves with some of the best tooled people out there, and we make sure that we've got access to all of them, and we get second opinions and third opinions on everything that we look at, everything that we do. Are we looking at this right? Are we missing something? What holes are we have? In our office, when you come in, we don't have Angela's clients or Jim's clients or Aaron's clients or Brett's clients. We work one entire book of business together for our families. And you think about all those minds that are concentrated on all these various topics coming in a room together and brainstorming for that client. There's a lot that hits right there.
Right.
Before we even outsource it to that tax attorney and say, what else are we missing? Or the CPA, what else are we missing? One of the first things that we typically do when we have a tax return come in is we go through it, but then we also send it off to someone that doesn't do taxes. All they do is more tax planning. We do a ton of tax planning, but we don't know everything. We can't know everything. Einstein said the tax code is the hardest thing to ever understand, right? So, you think about it, and this 101J is proof of that there are issues in it. And I'll be real honest, agents in particular in this situation, we have struggled hard with this because they feel like they didn't do anything wrong and they try to defend themselves. Well, they didn't do anything wrong. They may not have known what they were doing wrong, but the client doesn't understand that, obviously. So don't blame your agent, okay? Don't blame your CPA. Maybe they're not knowledgeable enough. It's probably, and I hate to say this, your fault that you're trying to use the same people you've always used and you've outgrown those people. You need someone to be able to help you from a bigger picture point of view that knows more about your success. We always talk about we deal with success issues. People that are successful. People often ask, and I heard this brought up the other, they deal with people that are rich. No, we really, really don't. we don't deal with the Donald Trumps of the world. We deal with people that are successful, though. Right. Because they're the ones that are struggling with all of these complicated issues that you just can't go to a surgeon and get the answer for holistic medicine. It doesn't work that way, right? And so you've got to think about how are you puzzling all that together and what fits where and when and how. And I think that's the biggest thing, with businesses. Buy-sell agreements, I'll tell you, I read them. I don't understand them well. So the first thing I do is send them to the attorney that we have on retainer to say, hey, and he's the one that does over 300 cases a year of buy-sells. So do you think he knows that business?
Yeah.
Yeah, just a little bit, right? So we send it off to him and say, what's this missing? And, unfortunately, if you go to an attorney that, doesn't write a lot of buy-sells, you know what they do? They have software to pull boilerplate language, and that's what's put in your buy-sell. So think about what you're paying for. Yes, they may be a great attorney. Yes, they may be your best friend. That's completely fine. Let's keep using them. But let's make sure that the language that's in there is appropriate.
You could have found the same boilerplate information online.
That's exactly right. Exactly right. And most likely it's not applicable. I think I've told everybody about the time that I was rushing out of the United States. So I said, I'm going to get online and try one of these legal document things. And here I am. I look at the stuff all the time. And I got it, and I disinherited my husband. I was like, what did I do? I didn't mean to do that. So, it can happen. It's not the way it's supposed to be set up. And, the way we love to work, and I will brag on an attorney that we use out of Plano. He is awesome. He's awesome, number one, because he prices like he's out of Abilene, not out of Plano. Number two, though, is he is so team oriented. And I love attorneys that are user-friendly, team-oriented, because he knows his business well. He knows what he does well. But he doesn't hesitate to have our tax attorney say something. He doesn't and input that language or talk with him about it. He doesn't hesitate to let the trustee have the input on, hey, I can't work that trust if it's written that way. We may have problems with the kids. We need to maybe think about a different way. And those are some wonderful things when you've got people communicating on your behalf. It's going to go a lot further, right?
We talk a lot during this show about communication.
That's right. And this is big, so, don't create a tax nightmare for yourself, right? It's not worth it. It's not, you don't have to do it. I think so many times we just think, oh, I've got something, and we forget. And, in their case, they were underfunded. They were funded the wrong way. Everything was set up incorrectly, but it wasn't the fault of a professional. It was a fault of a lack of a professional. And I think that's the biggest thing. And yes, I am trying to sell Kennedy Financial Services right now because this is what we do. This is our bailiwick. This is where we get our bang for our buck for our clients, is we make sure that they're taken care of and their spouses are taken care of at the end of the day. Their businesses are taken care of. They can focus on what's most important to them and live life on purpose, right? So we appreciate everyone listening to the show every week. My name is Angela Kennedy Robinson, right here in Eastland, Texas with Kennedy Financial Services. God bless everyone. Have a great week.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Don't forget to learn how our sister company can assist you with all of your tax, bookkeeping, and consulting needs. You can find out more at briscoeandassociates.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.